We do want to bring into the conversation right now, though, our friend there at Barron's, Al Root, a reporter who covers all of this. He's going to help us make sense of what President Trump did today. What did he levy? What is the nature and the impact going to be of this new tariff regime? Al joins me. Al, good to see you here. You've been watching all the reaction there from Canadian Prime Minister Mark Carney, Australian Prime Minister Albanese, Speaker of the House Mike Johnson, and so many others. This is a minimum baseline tariff of 10% on all of these countries. It's about 60 plus countries here. The rate is higher for our top trading partners. Now, President Trump said this, Al, we can no longer commit economic surrender with these huge trade deficits between these countries here. Will the tariffs reduce our trade deficit with some of these countries that the president is talking about?
Theoretically, good to be back. Hi, Andrew. Interesting day. Theoretically, over time, sure, you will reduce your trade deficit. Some of that will be at the cost of overall economic growth. And again, so if you sort of take politics out of it, you know, we've organized the world post World War II that free trade was a good thing. You know, getting ripped off in terms of Canada is like getting oil and electricity from Ontario and wood from BC. So ripped off is sort of an interesting way to think about it. Now, President Trump seems to equate trade deficits with somehow being ripped off. Most economists would disagree with that. But the one thing we learned today in terms of all of these messages is he is very serious about these tariffs. And then like you see from Canada, we'll get into the second derivative effects now with watching people, do tariffs on us and just an escalation. And then we have to see where it ends.
So, I mean, Al, the president is talking about returning to this pre-World War I, pre-Federal Reserve, pre-federal income tax U.S. economy. And he says that essentially was the United States' golden age when it comes to wealth accrual. What is he talking about? What does he mean by that when he wants to return the U.S. economy to that? What is that?
So, back in the good old days, mercantilist, mercantilist was like, you go and you sort of take resources and you bring them home and you make stuff here and you put up tariff walls and domestic manufacturing is great. And then somebody had the good idea of like, well, if we trade with you, you make this, we make this, we're all both better off. It's sort of basic economic theory 101. If you go, so it's almost like a weird debate, right? It's kind of like when you bring up something that nobody understands or has thought about for 100 years, you have to go, huh? But, tariffs versus income taxes and things like this in the golden age. So, I know for a fact they didn't have heated seats in their Toyota Corolla in 1887. I know for a fact they didn't have avocados 100% of the time. So these wealth estimates are, Coke was a nickel, but that was 2 weeks of your wage. So it's very difficult. We are richer now. Now there's a separate question of fairness and what sorts of, has globalization gone too far? I sort of get all that. But, to sort of use 1887, pre-World War I as the justification for it feels a little odd to me.
Okay.
And if it feels a little odd to everybody else, it's because it's a little odd.
So I want to talk about the word reciprocal, because you can make the argument that this was not a one-to-one reciprocal binary match, 20% on the U.S., 20% on everyone else. Yes, there is going to be a baseline tariff of 10%. But you heard there President Trump say, we're going to be kind. We're going to charge some of them half, so it's not fully reciprocal here. Why are they still being called reciprocal then?
That's a good question. I would answer it this way, right? So the countries with the largest trade deficits, China, for one, Taiwan seem to be getting hit relatively harder. I think reciprocal to some extent is this idea of fairness. So, he talked about milk tariffs in Canada and things like this. Like, there's not a lot of milk trade. It's a sort of a small industry, so it's always very difficult. So, I do think that the Canadian milk tariff is too high, but I'm not sure what that matters. So this idea of sort of resetting the bar for fairness, and then on those, we'll be fair. I think that is like a little carrot to people, like investors looking at the stock market reaction, hoping that, okay, there's room for negotiation. So if you do something, then I can do something, then we can reset the bar maybe lower, a little more fair. But just the idea of reciprocal, I think that's fine. And then I think that we'll be fair is like the softest language he said today, that
Yeah.
maybe negotiation is still a possibility.
I mean, in his view, though, some countries did get some type of reprieve today because it wasn't one-to-one reciprocally.
Yeah, I mean, I'd have to go country by country, but like
Yeah.
the tariffs on China and Taiwan, very worse than Wall Street expected. That's for sure. If you look at
Okay.
Apple stock is down 7, right?
Wow.
I mean, because they get all their iPhone. I mean, they essentially make all their iPhones in China. So that was definitely like, whoa. I think that the total tariff on China is going to be in the range of 50% if you sort of add it all up.
Okay.
And then we have to like, okay, is that actually what's going to happen? So that was like, oh my goodness. And then on like EU and places like this, you just have to sort of go down the list.
Yeah.
I think as when he held up that chart and then people sort of zoomed in on the chart and then started looking at the reciprocal tariffs, they were like, wow, some of these are actually pretty severe.
Okay.
Maybe it's because we didn't really realize how we were treated like with India or Taiwan or things like this, because they're not really large trade partners. But it was a bit of a surprise.
So, Al, I want to ask, because some Democrats are characterizing this as not Liberation Day, as Recession Day. Chris Van Hollen there from Maryland on the Senate floor just last hour said that what essentially happened today was a national sales tax was instituted on the American people. So is all of this a tax hike that President Trump just did last hour? Or do you think industries, knowing this was coming, I'm talking about domestic industries, knowing that this was coming today, prepared and absorbed as best they could what this was today?
Yeah. So couple of things. So we can debate whether globalization has gone too far and where we should be and all this sort of thing. Barron's position, Wall Street Journal's position, most economists' position, this will raise prices, right? And then it's just so like the most immediate price increases are the things that turn the fastest. So you would see this in theory fastest at like the grocery store. So, some of the produce that's imported, especially in the winter, yes, that would get more expensive. That'll get more expensive almost immediately. You look at Lululemon stock, that's down. They're importing things from overseas on the textiles front. There's a supply chain there, but within 6 to 9 months, cars, clothes, food, there should be some inflationary pressure on those. Again, like let's take cars. How much? Automakers will push back against their parts suppliers on price increases. They will cut costs to try and avoid raising prices. So I can't tell you like that disastrous scenario people like to publish, like imported car up $10,000. Probably won't be that big, but there will be inflationary pressure all the way through the economy for like 6 to 9 months while this unfolds.
Okay.
If things stay as exactly as they are now.
I see. So Anderson Economic Group released its analysis today of these new tariffs, how they will impact the auto industry for consumers here. Tariffs are expected to cost an additional $2,500 to $5,000 for the lowest cost American cars and up to $20,000 more for some of these imported models. So I thought that was interesting here. So what about when President Trump says this? There is no tariff if you build here in America. Will industry respond to that? Have they already?
So the problem is, yes, that's true, right? We have a few problems. One is we actually, like if we don't have endless workers. Actually, unemployment's relatively low. And from a manufacturing perspective, people have trouble getting enough people versus having too many people. Problem number one. Problem number two is these are, Ford broke ground on its Blue Oval. So they're building a battery plant. They're building a manufacturing facility in Tennessee, right? They're spending tens of billions of dollars. They broke ground in 2022. They're looking to open that in 2026. Even if you go at rocket speed, siting, permits, building, you're talking about 2 to 3 year programs to reorient your footprint. So it's very slow.
Okay.
There are no sort of empty factories that we will turn on and we will start making things here. It's a very difficult process. So, President Trump's goal is to bring more manufacturing here. This will do it. It might not be the most efficient way to do it, and it will do it probably a little more slowly than you would expect.
Okay.
But it will happen eventually.
Al, last question for you, though. Where should we look next? I mean, what indices will you be looking at about how these tariffs are being received?
You know what? You can look at everything. So that's a terrible answer, right? I would start to look at jobs. So over 6 to 9 months, you would start to look at inflation, just broad inflation data to see if how bad it is.
But I'm talking like tomorrow. What should we look for tomorrow?
I mean, goodness gracious, look at the S&P 500, right? And I think it'll be a push and pull, right? So the S&P 500 futures are down about 2%. Like I said, Apple, some of the tech stocks that use these chips, down 5 to 7%. Watch how they trade. Or do they close off the lows, which is like, oh, maybe it's not so bad. We're going to negotiate. Maybe I'm overreacting. Does the Dow drop 1,000 points or 2.5%? Is it one of those 4-digit days? You just watch the initial stock market. The market is good. Sometimes it's overreacty, but especially now that futures are down 1 to 2%, see how it closes. Do we close off the lows? Okay, we see what's happening here. Maybe negotiation, maybe not as bad as feared. But if sentiment starts to really slide and you sort of close at the lows, that's sort of like bad news.
All right. Al Root, can't thank you enough. I think that was easily digestible enough for viewers because this was quite impactful, very sweeping. That's how it's being described. Al, we'll talk soon.
Yeah.
All right. In the meantime here, let's take a quick commercial break. A lot more where that came from in these 2 minutes.